Keshav Bhajanka from CenturyPly joins in to talk about how their quarter has been. Keshav, hi, morning. Good to have you on ET Now as always. Just going through your quarterly performance, your revenue has seen an uptick of about almost 18%. What were the main contributors, do you think? And more importantly, can this kind of momentum really continue for the next few quarters too?
Hi, good morning. Thank you so much for having me. I think the major contributors in terms of revenue were our plywood division and our MDF division. Both have done much better than even we would have hoped and projected. So plywood with a growth of close to 20% year on year has done fairly well. And MDF with a consolidated growth of 30% plus has been largely in line with target. So I think that going forward, we are confident that we will not only be able to maintain, but perhaps accelerate these numbers slightly.
Right. Good morning. This is Sh joining the conversation. But though we've seen a jump in your revenue, your margins, I believe that one has come in significantly lower when you look at it on a year-on-year basis. About 9% or so is the margins figure that we have. And also there's been a dip in your profit, a significant at that 58% on a year-on-year basis. Exactly what ailed both of these segments or these sort of financial categories? Also, what should one expect?
I think that in terms of margins, for MDF, we have seen an acute rise in raw material prices, and this has caused a lower margin. We have been unable to pass that on to the market until November. November was the first time we have taken a price increase during the current year. And I think now it has bottomed out. Going forward, I think we'll see a strong recovery as far as the MDF segment is concerned. For H2, our guidance would be that we would be close to 60% volume growth and 40% revenue growth in terms of MDF consolidated. And in terms of EBITDA margins, we would be close to 15% on a standalone basis and slightly lower on a consolidated basis because we have come up with a very large capacity in the state of Andhra Pradesh. And as you know, operating leverage will kick in as utilization builds up. But we are fairly confident that we'll be EBITDA positive within this quarter itself for MDF, and going forward, we'll achieve similar EBITDA margins in our 𝘱𝑑𝑒𝑙 unit as well.
Right. So that's like a positive outlook that you've given, especially when you talk about the growth going ahead, especially on the volumes of revenue, especially your MDF segment. But let's talk about your plywood segment. That's seen a growth about 20% in the sales. What sort of aided this one then in the quarter gone by? And also, most importantly, what everyone would want to know, is this rate sustainable?
I think for the year, we had initially given a 10% plus value growth for plywood. The first half has done better than expected, as you rightly pointed out. But for the second half of the year, again, we are looking at 12% growth. And we could average, yes, that would lead to a higher growth for the entire year. But 12% growth in H2 and coupled with our EBITDA margins being between 12 to 14% again. For plywood, that is the outlook. For MDF, blended margins would be lower, but standalone EBITDA margin would be close to 15%. And on a consolidated basis, we'll be looking at a 40% plus revenue growth in H2.
All right, let's talk about your expansion plans then. And I believe let's talk about the new unit for resin as well as formaldehyde. If you could tell us what's the strategic reason behind setting up these two units in Punjab particularly, and how does this actually fit into the overall growth and expansion plans for your company?
So this is a form of backward integration. And you see, we had planned to set up this unit in the year 2017 itself. But due to certain local problems and due to certain licensing issues, we were unable to do so. So this will give us far more control on the quality of our resin. It should lead to a lower raw material cost, and hence it will expand our EBITDA margins. So it is just a step in terms of raw material security and backward integration, and it is likely to aid in terms of lower cost going forward for the MDF Hoshiarpur plant.
Okay. Keshav, any more capex which is on the anvil or any new addition to your product lines?
Currently, we are working on an expansion in our particle board capacity with a new plant that is coming up in the state of Tamil Nadu in Chennai. That should become operational in Q4. So for the time being, that is it with the capex. And now we're going to wait for these assets to mature and sweat them out before taking a decision on further capex.
So how is it that you're viewing your second half of the fiscal? What numbers do you think you'll be able to clock in?
So for the second half, like I said, in plywood, we'd be looking at a 12% plus growth with a 12 to 14% EBITDA margin. With regards to laminate, we'd be looking at 10% plus growth at 10 to 12% EBITDA margin. MDF, it is difficult to give a consolidated number because the new unit is shaping up and is taking some time because of initial teething trouble. But on a standalone basis, we'll be at 15% plus EBITDA. On consolidated basis, we will be lower, but we'll definitely be EBITDA positive in the new unit as well. Overall, the value growth for MDF, like I've said, will be 40% plus. And for particle board, we'll be looking at a 10% plus EBITDA margin, but a flattish growth till the new plant comes in.
All right, then we leave it there. Thank you so much for joining us, Keshav, and also talking about your numbers, especially the growth that one should watch out for CenturyPly going ahead. Thank you so much for being a part of the show. On that note, we'll slip into a break on this edition of First Trace. When we come back, we'll